Looks like September, we're going to start cutting rates. Lisa Cook, one of the Fed governors, she just so happened to get a mortgage in Michigan. 2 weeks later, get a mortgage for a home in Georgia. And both times she said she was living in the home as a primary residence. By saying a home is a primary residence as opposed to a second home or an investment property, you're getting favorable terms. That's mortgage fraud. This illustration does not disappoint. Never a dull. Welcome to the Real Estate Show with Pat Lopez, where we talk everything real estate. For this show, I'm going to be talking about Jackson Hole Economic Symposium and also Lisa Cook. This administration does not disappoint. Never a dull moment. There's always fireworks going off, and there's no exception on this week. So here we go. Let's jump into Jackson Hole. What is Jackson Hole? It's an economic symposium. You have central bankers, policymakers, the Fed. They all show up and they talk. And Chairman Powell was there, and he started talking about the state of the economy. And he turned around and pretty much said, hey, barring any craziness going on in the economy, it looks like September we're going to start cutting rates. So the market really liked that, and the market started to improve as far as interest rates. Now understand, Federal Chairman Powell does not control the 30-year fixed rate. That's a mortgage-backed security. It's a 30-year bond, okay? But they do control the federal fund rate. And typically how the federal fund rates go, if they're lower, generally the interest rates follow as far as the 30-year mortgage-backed security or mortgage bond. So, you know, they have a symbiotic connection. So the market reacted to what Chairman Powell said, saying, hey, it looks like we are too tight. We're not accommodating at all. We're restrictive. And barring any craziness going in the marketplace, they're probably going to start cutting in September. So interest rates dropped a little bit, and we hit all-time lows for this year. Not all-time lows, but lows for 2025 as far as the 30-year fixed rate is concerned. So super good news. Let's see what happens. Let's see moving forward. Now understand, the markets always try to predict. They don't want to react. They try to predict. So some of these gains in interest rates, we're getting them now. So on September 17th, when the Fed meets, if they turn around and they only cut by a quarter, but they're saying, hey, we may pull back, then we could probably see interest rates go back up a little bit. So let's see how everything transpires. Also, they did mention, Powell, that the tariffs didn't have as big of an impact on inflation as they thought they were going to have. So yes, has inflation gone up just a little bit? Yes, but it's still around the 3%. So it's still, well in line and much lower than the 9%, a couple years ago. So it is sort of trending in the right direction, and it's stabilizing, and the Fed is more concerned, and this is some of Powell, what he was mentioning, they're more concerned with the job market, and because the job numbers came out a little bit soft, so they're more concerned about that. Remember, the Fed has a dual mandate, jobs and inflation, keeping full employment and keeping inflation low. They're more concerned about the job market, and inflation seems to be under control, and they put that on the back burner. Now, the second story that dropped, Lisa Cook, one of the Fed governors. Well, she just so happened to get a mortgage in Michigan, and then 2 weeks later, get a mortgage for a home in Georgia. And both times she said she was living in the home as a primary residence. So within 2 weeks, she applied for 2 primary residence. Okay, well, for all of us in the real estate world, that's mortgage fraud. Their down payment requirements are higher, interest rates are higher. So by saying a home is a primary residence as opposed to a second home or an investment property, you're getting favorable terms if you're saying it's a primary residence. So the Fed or shall I say, the president is saying, I'm going to fire her, which we don't know 100% if he can do that or not, but he's saying he's going to do it, and then he pulled the trigger by sending a letter saying, hey, you're fired, and he's going to nominate a new Fed governor for that position. Now, understand, many people may think, hey, that's a little bit trivial, but you're on the Federal Reserve Board, okay? And your standards are so much higher than an average individual. So how are you making policy? How are you judging others if you're, if you're not squeaky clean yourself? So that is an issue, and there is a history of other Fed members resigning because of improper activities. There was some stuff as far as insider trading, which they end up finding out that there was no insider trading, but just the optics of it, they resigned anyway because they didn't want to blemish the integrity of the Federal Reserve. So there is precedence to that the integrity of the Fed has to be, unscathed and unblemished. So I think Trump in this case has a pretty good, case why Lisa Cook should step down or resign. But he sent out the letter to her saying, "Hey, your services are no longer needed." So a ton of excitement, fireworks. Once again, this administration never disappoints. Now, the reason why Trump wants her to resign, or if he does have the power to terminate her, would be now he's able to put somebody else that is going to follow his thoughts as far as cutting rates. Because once again, we are still restrictive as far as interest rates or the federal fund rates are concerned. We're a good, 1.5 points higher, and just from hitting the neutral stance, okay? So we are still on the restrictive side as far as that's concerned. Now, overall, what is going on? Numbers are soft. July numbers came out, number of transactions, sales, soft. Even inventory coming on the market, soft, slow. It just seems like, everybody is just on the sidelines and nothing is happening. Now, let me preface this by saying real estate is local. So your market could see multiple offers, other markets, ton of inventory, price cuts, and it really just seems like half the nation, or a little bit less than half the nation, is a little tight. That's the Northeast, still a little bit tight. Inventory levels are still low, and then you have the South, Southwest, where there's a ton of inventory and there's price cuts. And matter of fact, CoreLogic came out, and they're estimating that house appreciation this year in 2025 will go up 1.75%. Now, inflation's around 3%, so right now we're not even meeting, as far as the appreciation of homes, the inflation. So 100% appreciation is slowing, which is good for affordability because people are still getting raises, and affordability is coming a little bit better. Still super restrictive as far as that is concerned as well. So a real quick update on what's going on in the market, what's going on with the Fed, what's going on with overall housing. Remember, real estate is local, so your area may be a little bit different than other areas. The Northeast still tight as far as inventory is concerned, and appreciations are going up higher there. If you're looking in the Southwest, those prices are coming down. We're actually having year over year pricings fall as far as the appreciation go down, and days on market going up. So super interesting.